Well, naturally, many investors ran for the hills when the lockdown started. Now it seems they are feeling pretty confident. The JSE surged to record highs earlier this month. Let's explore the implications now. Reporter Marillier joins us. So, Mike, this is finally some good news for people with retirement funds. Fair to say a lot of them feared the worst.
And who can blame them, Nandi, when we saw the crash that we did when that lockdown really took effect in March last year. Thankfully, we have seen a major recovery. Let me take you through the numbers very quickly, and you'll see how the bull market unfolded for several months during 2020 and the early part of 2021. So we're going to start over there on the 14th of February, Valentine's Day, and still a fair amount of love from investors. The JSE trading just under 59,000 points. And then take a look at what happened on the 19th of March. We hit a low point in terms of the JSE, plummeting to below 38,000 points. That, of course, was just before the lockdown became official. It took roughly 8 months, guys, before we recovered the losses from that crisis. So end of November, we were pretty much back where we started. But take a look at what has happened since then. On the 19th of March this year, surging to nearly 66,000 points. So we have seen a massive recovery. You could refer to it as a COVID kick, if you like. The question, of course, Nandi, is why is the JSE doing so well when the economy is struggling? And remember, the economy shrunk by 7% last year. Well, one of the reasons is that the big companies on the JSE do a lot of their business outside of South Africa. So they're benefiting to some extent from the recovery in the rest of the world. In fact, 4 companies account for just 52% of the value of the JSE. So you've got some massively big companies, and most of them do their business outside of this country. You might say we have a little bit of a vaccine against the crisis in our own country, and that's thanks to those big companies which are exposed to other markets. But let's focus very quickly on the numbers from the past few months, just to put things in perspective, guys. So from the 19th of March 2020 to the 19th of March 2021, we have seen the JSE climb 74%. You can see the numbers right there. We are still 14% above the levels we were pre-crisis. And in terms of 2021, guys, since the beginning of January, we've already climbed 10%. So certainly a massive, massive comeback. And that, of course, will be good news, as you mentioned, for anyone with a retirement fund hoping to get some money that they can use when they do retire.
So you've given us a snapshot of the COVID crisis, some surprising numbers there, but most retirement funds only invest over longer periods. Take us through the numbers for the last couple of years.
Yeah, that is an important question. So let's focus very quickly on the 5-year picture for the JSE. And the good news here is that we've hit record highs even over that period. And what you can see on this graph here, guys, is that during those 5 years, we basically traded between 50,000 points and 60,000 points. The lowest mark was about 49,250, December 2016. The high mark, January 2018, just under 61,600 points. And then look what happens after the COVID crisis, that so-called kick, which I mentioned, surging to nearly 66,000 points. So certainly over the last 5 years, we have seen a marked improvement. If you were worried that you were going to lose all the value that you had accumulated over the last few years, the COVID crisis perhaps offers some hope in that we did see a massive spike at the end of last year. There's no doubt the economy is in serious trouble, and that has all sorts of implications in terms of jobs. But if you are invested in the stock market to some extent, this is good news. Nandi? Gareth?
Right, thank you very much, Michael. Good to have some good news a year after we went into our first lockdown.